India has achieved a significant economic milestone, now recognized as the world's fourth largest economy. This ascent reflects years of consistent growth and development efforts. India's rise signals its growing influence on the world stage. Esteemed experts like Malcolm Dawson of Global X ETFs describe India's rise as inevitable. This accomplishment boosts national morale and confidence. It reinforces belief in India's path towards greater prosperity. What do these numbers signify for India's future? How did India navigate its path to this position? Understanding these aspects is crucial to appreciating this development. The journey involves impressive GDP figures and potent growth drivers. However, challenges require careful navigation. Let us examine the key figures underpinning India's new global ranking. The IMF projects India's economy to reach $4.187 trillion by 2025. This places India firmly in the top tier of global economies. India's ascent involves surpassing Japan, projected at $4.186 trillion. Economist Arvind Virmani notes this shift for the financial year 2025 to 26. Japan's economy has faced challenges like slowing productivity and an aging population. In contrast, India's GDP more than doubled during a similar timeframe. However, India's per capita GDP remains significantly lower than Japan's. This gap underscores differences in living standards. When adjusted for purchasing power parity, India's per capita income is still lower than Japan's. These figures highlight the need for continued growth and development. India's large economy must translate into individual prosperity. A key factor fueling India's economic engine is its youthful population. This demographic provides a vast talent pool driving innovation and productivity. Domestic consumption forms another pillar of India's economy, accounting for over 56% of activity. Rural areas contribute significantly to this consumption story. The service sector and technology industry are star performers in India's growth. India is becoming a global hub for IT services and digital innovation. Lower global oil prices benefit India, which imports 80% of its energy needs. Stable oil prices help manage inflation and reduce the import bill. Higher global gold prices positively impact household savings. Proactive government initiatives, including tax cuts and stimulus measures, boost economic activity. These factors collectively drive India's dynamic economic growth. The nation's young workforce and robust internal demand are key growth drivers. Continued focus on these areas will sustain India's economic momentum. Despite impressive growth, India faces significant challenges. Socioeconomic issues like poverty and income inequality persist. Addressing these issues ensures inclusive growth. Infrastructure development requires substantial investment. Upgrading transportation and energy infrastructure is crucial. Investing in human capital is paramount for India's future. Education and skill development are key to a competitive economy. Ensuring employability of the youth population is a challenge. Projections for India's economy remain optimistic. GDP growth is expected to continue robustly. India is anticipated to overtake Germany by 2027. This would establish India as the world's third largest economy. India's economic growth attracts global capital. Foreign investors are increasingly interested in the Indian market. The expanding consumer base presents diverse opportunities. Increased foreign investment fuels economic expansion. India's integration into the global economy is growing. A potential trade deal with the US could boost trade and investment. iPhone shipments from India to the US surged by 76% in April 2025. This indicates India's capabilities in high-tech manufacturing. Investor confidence is reflected in positive stock market trends. India stands at the cusp of a transformative economic era. Continued reforms and strategic focus will enhance India's global standing.